Welcome to this overview of buying a business. I'm Peter Towers, Managing Director of ESS BIZTOOls. Buying a business is part of the advisory intro package, which is the first of the 4 packages that ESS BIZTOOls has developed to assist accountants and bookkeepers to be able to offer a range of advisory services and actually deliver those advisory services to SME clients. In the current business climate, SMEs really need professional assistance. And I hope that the viewers of this video will be keen to supply advisory services to their SME clients. If you have any question about any aspect of the matters that I discussed to you today in this video, please don't hesitate to contact us. You can send me an email, peter@essbiztools.com.au, or telephone 0747241118, and I'll get back to you, and we can probably organise a Zoom meeting and just go through and look at your questions. So what we're going to do now is move into the ESS BIZTOOls website so that we can show you the key components of the buying a business. So I've gone to the ESS BIZTOOls website, and in the subscribed content, there's a lot of content in ESS BIZTOOls. We're going to click on buying a business. We're going to download that content so that you can have a look at it. In each of the 32 product packages within ESS BIZTOOls, there is a procedure control form. So I'm clicking onto that now. This is the form for buying a business and gives you an introduction to the processes. Talks about the quotation and the proposal, and it refers to the buying a business consultancy paper, which we're going to refer to shortly. Refers to a number of links to additional information, which we call BAS forms, BAS, Business Advisory Services, not the other BAS that the tax office started after we started using BAS as the indicator of a form. And then we have in section B, the articles to assist the business purchaser, because we believe that making information available to your clients and educating them will really assist you to develop a strong relationship with your client, that you can actually deliver advisory services to help them in their business venture. Then we go into the work checklists. These are the points that you could discuss with your client. Thinking of buying a business, purchasing a business checklist. And I'm going to show you a couple of those in a moment. So the idea of the procedure control form is to guide you through the process. This is the form for one client. So you have a record of what you did on this assignment, so that you can file this in the client's file. And you've got all the supporting documentation. We talk about buying shares in a company, and I'm going to comment further on that in a moment. So what I want to do now is go to the buying a business. So we're just going to click out of there. And I'm back on the main menu again now. And I want to go to the buying a business document. On the screen, you have the buying a business consultancy document. Each one of our papers has a set of contents. And you can see we're covering a range of issues here. This is to guide you in the undertaking of the advice to your client. Now, this may have come about by having a one-on-one meeting with the client, and the client, or perhaps even the prospective client, has indicated to you they're thinking about buying a business. So we discussed what's included in buying a business consultancy module. I'm going to show you that BAS 1050 separately in a moment. And this paper is what you would make sure your team, who are going to be involved in talking to clients about helping them to purchase a business, would have a training session on. We're also going to show you this form relating to thinking of buying a business in a moment. I'm just giving you a quick overview now of this control paper, if you like. We have the education package. Which is identified in 1051. And it covers all these things, because this is the total equation when you look at helping someone to buy a business, thinking about buying a business. Structures. Are they going to be a sole trader, a partnership, a trust, or a company? What's the benefits? Budgets and cash flow forecasts. They need them. Marketing and advertising. How are they going to do it? Are they looking to buy a retail business or a trades business or a manufacturing business? Or are they going to be in a professional business? Because they've each got peculiarities. Each have different methods of determining how they're going to charge for their products or their time. Excellence in business. Some human resources issues to consider. Taxation. What's the risk management policies? Evaluation, legal, business records, working capital. Remember, this is all about buying a business. So we want to see how all that's going to fit together. Then we have the due diligence review. Buying a shares in a company is a big potential problem area. So we've given you information to guide the client, the due diligence format. Quite frankly, I would avoid buying shares in the company if it's a very small company, unless you're really able to check the history of the company. Because remember, if there's a problem with the tax office, or indeed the corporate affairs, or a lot of other people, Australian Security Investment Commission, the current directors and shareholders may wear the problem and wear the potential penalty. So this is a brief overview of how this product all fits together. There's other data from the Australian Bureau of Statistics. There's organisations which undertake due diligence reviews on traffic counts and major shopping centre profiles, and that's included in 1055. Questions you need to ask your client. Can the business run without the current owner? Some businesses find it very difficult to run without the current owner because the whole thing's built around the current owner's personality. Is your client the same personality? And that can be very difficult. Is there a manual or a template on how to run this business, or does that need to be developed? How good are the staff? Are they going to remain? Is there a good management team? Does the vendor own similar businesses in close proximity? Does he have children or grandchildren? What are they doing? One of the things you need to be aware of is there could be a de facto transfer of the business to another business, but your client's been asked to buy the business. So you need to make sure that you follow that through. Otherwise, you might have some problems with your client. Are the assets part of the deal? And are they appropriately valued? If they're not part of the deal, is your client going to have the money and the ability to assemble the plant and equipment that's needed? What's the unique differentiators of this business? So there's a whole range of issues there that you need to appreciate so that you can have that conversation with your client and find out where all this is potentially going. So that's the procedure control form and the overview of the paper, Buying a Business. So I've now gone back to the main heading, and I want to go to thinking of buying a business. So this is this document. I'm just going to do it. You should now be able to see thinking of buying a business. So these are some questions for you to get the client's response from. Does the client know anything about the business? I've had people over the years come to me for advice, especially when I was running an accounting firm, that had no idea how a particular business operated. It just sounded fun. I had an ex-managing director of a public company who decided he was going to buy a retail grocery business. I'm trying to think of the best description of it. In a tourist area. And he thought he was going to go sailing 3 days of the week and work 3 days and have another day off. He got a big shock when he got into that business and found that deliveries were turning up at some very strange hours in the morning, that he had the price product. And in fact, he was using what he had forecast to be the gross profit percentage as the marker on stock. So instead of marking something up 50%, he was only marking it up 33 1/3%. And after some time, he realized his bank balance was not going in the right direction because he obviously had the cheapest product in town. So you need to be cautious how you approach clients, but don't assume that even if they've been a managing director of a public company, they know how to run, in effect, the corner store, because that's what this one was. And you need to be able to diplomatically suggest to them they might need some additional training. Now, that particular client was very humble when he realised what he'd done and apologised and said he'd always had an accountant did all these sort of calculations for him. He never had to worry about it before. So that's what I'm getting at when someone gives you the impression they think this is going to be a holiday. Running a business is not a holiday, or if it is, that's a good secret because I've never really found it. I've been advising businesses and running my own for many years. I think the client has to be serious. If they don't want to put in the hours, they probably shouldn't be risking their money in the business in the first place. They might be able to play golf for 4 or 5 hours 1 day a week, and then again on the weekends if they're not a weekend-centered business. But so many SME businesses these days are really centered on weekends, so very difficult to think how they're going to play golf on a weekend or even the time to go to the football. So people need to assess all this when they're considering whether to go and buy a business. One of the big problems was identified recently by the managing director of MYOB, who indicated in an article in the Financial Review, it was about 4 weeks ago now, that he's seen a large number of businesses that start off with a great idea and they get going, they trade for 6 months, and then suddenly they hit a brick wall because they've got no idea of financial management. They haven't followed through and thought through the cash flow implications. They might have said to you, oh no, we don't need a budget and a cash flow prepared. I think they do, because they need to face that reality as to whether they have enough money that they're putting into the business. I think a lot of newcomers to business think that everyone's going to pay them cash or by card on the day they deliver or hand over products to them. If it's a business to business, that is difficult to achieve. Businesses want credit, basically demand credit, especially from a new business or even a new owner. But you need to have some frank discussions with clients to make them aware. And that's why the preparation of the budget and cash flow forecast that's part of our material is so important, because that will hopefully give them a reality check. It might mean they haven't got enough money. They may have to go and try and find a partner to come into the business or secure some additional money from somewhere. Because what the managing director of MYOB was talking about is they hit this financial crunch. They've had to build up their inventory, and a lot of their inventory they may have had to pay very promptly for. Cash on delivery, payment within 7 days, and the stock builds up. Sales aren't quite as good as they thought they'd be. So up to 6 months, they've built up stock, and in the main, it probably had to pay for it. Haven't got much credit offered to them because they've got to create a credit history. Now, this applies even to an established business that someone's acquired, because the suppliers will want to get to know the new owner. Are they going to pay on time? And the easiest way the supplier can do is say, well, you're on cash on delivery or cash within or payment within 7 days, maybe 14 days. You need to make sure your client understands that this might happen. And then we get to the sales side of things. If they're dealing with the public, that's probably okay. So if they're dealing with consumers, that's probably great, because they're going to have cards, and some of them will still have cash, but most of them have cards. They'll pay straight away. But if they're dealing with businesses, businesses want credit facilities. And that will mean debtors build up. And unless you have guided them on the implementation of a sound debtor system that ensures that a statement is prepared and sent within 24 hours at the end of a month, and also the other big idea that suggestion we have is that on every invoice they produce for a credit customer, they indicate the date that payment of that invoice has to be made by. It's not 30 days after the end of the statement, it's 30 days after an invoice that they should be stressing. And all the statement does is summarise what's currently due for payment. If not, they're going to find that they've suddenly got debtors that might be sitting at 50, 60, 70 days. Not 30 that they probably expected if they've been reading textbooks. And depending on what their background is. I don't think people that work for government agencies get proper exposure to what's happening in the real world, because I found some of those people who've had fairly high-level jobs in the public service have great trouble with understanding that in the real world, people have to wait some time to get paid. And one of the big culprits there is government departments and big business. Some big businesses will take 2.5 months to pay. And unless there's an appreciation that this might occur, they will probably run out of cash. And this is one of the reasons why there needs to be a proper due diligence review of the business that your client's looking to buy. so that you know what the history is. What are the debtors paying it? If they're used to paying 90 days or 80 days, they will continue to do so, whether there's a new owner or not. If the new owner doesn't like it, they'll say, that's all right, we'll go and buy our product somewhere else. Who are the competitors? I've had people say to me, oh, we didn't worry looking at the competitors. I thought I had all the answers, but I don't care how good you think your business is or how good you think your client might be as an operator. We need to have a good look at competitors. So hopefully that gives you some insight as to what I believe are the key issues that our clients should be looking at as we go through and give them advice on this area. We have also in the system a purchasing a business checklist. This takes you through and gives you a document you actually give to your client. Purchasing a business, you need their trading and profit and loss accounts, preferably for the last 5 years, because you want to see the trends. Balance sheet for the last 5 years. List of salaries and other payments that have been made to family members. Some families don't pay themselves, but they take stock out of the business. You need to understand what's been going on in that thing so you can reconstruct the financial accounts and then make sure you put in an appropriate salary within the business. Rent could be an issue. Your client might be buying the business premises. I think it's always a good idea to put rent, even though it's rent being paid back themselves, because if they undertake any benchmarking appraisals of comparing the business to benchmarks, rent will normally be included. So there's a whole checklist there of information that I think you should be asking the client to get from the vendor. And if the vendor won't give it to them, well, they probably should be walking away from any discussions. What's the restraint of trade? People seem to forget some of these things at times. Oh, no, we don't need that. Of course you need that. And you need to make sure what might be happening with children and grandchildren of the family, especially if that family's got a big, solid business presence. I've seen situations where the grandson was opening a business, or already had a business actually. It was a bit smaller, but he was in business only about 3 kilometres away. And the vendor ultimately went in and brought all of his magic to that site. We can imagine what happened to the original business, and trying to prove that he'd done that can be difficult. But so who are the major competitors? What's their present position? What's their likely future? What are their reasons for success or failure? People need to sit down and do a SWOT analysis on competitors and do it honestly. What are their strengths? Can you compete with them? Have you developed a strategy? Who's the major suppliers? Make sure your client talks to those suppliers before they sign a contract. I've seen situations where people bought a business and the supplier declined to take them on as a customer. That caused a few problems, running around trying to find new suppliers in what was a fairly narrow industry. There wasn't that many suppliers. What's the terms of trade that the vendor's been offering? If the vendor has been happy to allow people to trade on making payments, I said before, 80 and 90 days, I hope it wasn't that long, but anyhow, your client's going to have great difficulty changing them back to 30 days. So that's some of the material that you might think about there to give you thoughts. And what we're obviously giving you now is an overview of what's in this system to help you give this sort of advice. In the preamble, I mentioned buying a shares in a company can be an awkward situation. Now, over the years, I've advised people who have bought shares in a company. One was a major land development, and the company had received an approval for that land, which had previously been Crown land, by an Act of Parliament. And the Act of Parliament specified the company's name. Now, at the time, in fact, I think it would be even more obvious these days, there was a feeling that if the proposed purchaser went to the government and said, well, we'd like to change that agreement and put our name on it, rather than us buying a company that had been in business by that stage for over 20 years and could have had all sorts of legal impediments against it, that could have led to the government of the day, which was not the political party that had approved the original deal, may well have revoked what had been granted as an Act of Parliament. Now, whether that would have actually happened, no one knows, but it was scaring a few people. So I was asked to review what had happened in this company in that 20-year period. It was a big job because the company had been involved in quite a number of other transactions. And what we had to make sure was that there was no skeletons left in the cupboard that could come back to haunt whoever were going to be the ongoing directors and the shareholders. Because the vendor directors were going, obviously, and once they got their money, which was a considerable amount of money being paid, they could have disappeared anywhere. In fact, I never heard from them again after we completed our due diligence. So on the screen, we're showing you some of the questions you might want to ask as you go through and try to understand what had happened. And in fact, this form was basically based on the form that I developed to undertake my due diligence, because I couldn't find one when I was given this brief by the client's solicitor. Actually, I want you to go through and tell me if there are any skeletons in the cupboard in this company. Now, obviously, we were given access, and the vendor was quite keen to sell. So we were not fighting in a hostile environment, which I have come across in a couple of other instances, which related to family court matters, obviously divorces, which I did a lot of work with in the business settlements. So you need to be careful in this area and make sure your client understands that there are some risks, significant risks in buying shares in a company. Because one of the big things you don't know is, has a minute been prepared for every board of directors decision? That's number one. And number two, is there some documents floating around out there somewhere that somehow commit this company to some deal that might cost them money? And once you've paid over the money to the vendors and they've literally disappeared, it's a bit hard to go and take action against them if you can't find them, or if they're gone off and spent the money and it's all gone in any case. So it's something you need to think about. Is there a term sheets? Is there shareholders agreements? My preference is try to talk your client out of buying shares in a company. But I do appreciate, because I've been through that very position that I'm referring to, that sometimes it's unavoidable. You need to buy the company. Now, the good story is we had no skeletons in the cupboard. I didn't find any, and none emerged over the next few years, thank goodness. But it's food for thought, isn't it? So that's our overview of how this whole process works in buying shares in a company, and therefore buying a business. What could you do to offer to your clients? to offer this consultancy service to them. We think we've included all the material that you will need. If you come across anything that we haven't included, we'd love to hear from you, so we make sure we can add that into our package. I hope that you find this overview of buying a business of interest, and we would welcome you as a subscriber, member of ESS BIZTOOLS, starting with the advisory intro package, so that you can be able to deliver advisory services to your SME clients. Stay safe. Have a great day. Goodbye.